I'd like to start by introducing Shoshana Technologies CEO, Linda Teaman, who is in turn going to introduce us to our guest presenter for today, Angelo Spinola. So, Linda.
Hi, everybody. I wanted to give this the proper due here. I just want to say how important it is for us here at Shoshana Technologies and part of our business strategy that we keep our Rosemark owners and their staff informed and up to date on industry trends. And that's why we're so pleased today and honored really to have Angelo Spinola with Littler Mendelson. Angelo is a shareholder with Littler and a core member of their wage and hour, healthcare, and international law practices group. His expertise is really unsurpassed in the employment law, especially in the home care and home health care space. Many of you may be well acquainted with him because of his participation in our industry conferences. It's important to say that Littler is one of the world's largest law practices devoted exclusively to representing management in the employment and labor law matters. So Angelo's broad knowledge of employment law brings us a very amazing perspective that is extremely valuable to you, the home care and home health care owner space. And because of the crossover of litigation that occurs in other industries concerning employment law, that can be a bellwether for our industry, and I know Angelo will get to that later on a little bit. Angelo has extensive experience defending companies in wage hour class actions, handling the Department of Labor investigations, and assisting companies with compliance measures. It is very generous of Angelo and his staff to provide us with this comprehensive view, and I would ask that you, the attendees, give yourself the opportunity to get the most out of this webinar by minimizing your distractions and settle in to get the most of this interactive presentation. So with that, Angelo, take it away.
Thanks so much, Linda. I really appreciate it. Thank you, everybody, for attending. Also, understand that there's a chat feature here, a questions feature. So as we go through and talk about some of these issues, please make sure you get your questions in, and I will address those at the end. So we're going to talk broadly today about some of the basics of timekeeping in the world of home care. And we'll also talk specifically about some of the most prominent types of claims we see. So I am a litigator. I litigate and defend home care companies when they're sued by employees and have a good sense of what employees are suing for. Generally speaking, they're going to be suing for overtime and unpaid wages of some sort under a variety of theories, and we're going to talk a little bit about how that works, what's the difference between exempt and non-exempt employees, how those classifications work, what's the most common type of exempt employee in your world, and then how to work with non-exempt employees, both from a compliance standpoint and with respect to some of these specific issues like travel time. As we're talking, understand that there are complex laws that apply, particularly at a state level where state and federal law can differ. So I'm not going to be providing legal advice today. I'm going to give you kind of broad overviews, and it's important that you make sure that you are doing things legally compliantly by having your individual companies assessed and reviewed, with an eye not only towards federal law but state law. I will mention state law here and there as appropriate. Just understand that this is a broad view that we're talking about today. So let's start with federal law and what the Fair Labor Standards Act requires. Just as a quick refresher, understand that there's a minimum wage obligation, right? And every non-exempt employee is entitled to at least minimum wage. Non-exempt means that they're entitled to minimum wage and overtime, that they can't fit within one of the specifically enumerated exemptions that the employer has the burden of establishing. And we'll talk more about those exemptions in a second. So under federal law, the minimum wage is $7.25 an hour currently, and you may be aware that Obama had an initiative to increase the minimum wage, and there was an effort to try to get the federal minimum wage increased to $10 an hour. And in the home care world, there's this concept that's really a union-backed concept called the Fight for 15 to increase the minimum wage for a companion or a home health aide or personal attendant, depending on what jurisdiction you're in, to $15 an hour. So as of right now, those efforts are really more localized than they are national. So we're not seeing the same fight. There's a little bit of noise about increase in the federal minimum wage now as a result of the midterm elections and the Democrats, taking the House. But it's unlikely that we're going to see much action at a federal level. What you're going to see is minimum wages increase at a state level, and we'll talk about that more in a second. In addition, there's a requirement for all non-exempt employees, and that would include live-in caregivers now, right, for any live-in that's employed by a third-party agency, such as the folks that are on the phone. The companions, there's no longer a companion exemption. LPNs would be treated as non-exempt, typically, right? Most of your employee base are going to be non-exempt and entitled to overtime after 40 hours in a week. There are some states that require daily overtime, like California, where there's not only a weekly component to overtime, but a daily component. So again, you have to make sure you're aware of what the state requirements are, and you comply with whatever is most favorable to the employee. So in a state like California, that has a higher minimum wage than federal law, you have to always pay that higher minimum wage. But if the federal law is more favorable, like in a state like Georgia with a lower minimum wage than the federal minimum wage, you have to pay at least the federal minimum wage. So that's generally how it works. The most common type of lawsuit that we see, the biggest issue, is related to whether a non-exempt employee is working or not working. And that begs the question as to what is working time. And the challenge with the Fair Labor Standards Act that so many struggle with is this concept of work being anything that's beneficial to the employer that is suffered or permitted. In other words, I'm not saying that it's required, that you've said that I require you to come in and perform this job, or I'm requiring you to spend extra time with the client that is beyond the service hours that we've contracted with that client for, or that will be reimbursed for by a government program. That's not what we're saying. It's suffered or permitted. So another way to say that is allowed. If I am allowing somebody to work for me as an agency owner and not stopping them, and I'm getting the benefit of that work, it's benefiting me, like my client is happier as a result of it, that's compensable time, even though I didn't require it. And what that means is that that standard of suffered or permitted effectively means that the employer, the agency, has the responsibility to ensure that people are not working when they're not supposed to be working. And if they are working when they're not supposed to be working, even if you have a policy that says they're not supposed to do that, you must pay them for that time. And that single issue is the most significant and difficult issue in this industry, because you have people that are working outside of your realm of reach, right? They're not under your nose. They're not coming into your office. They're working out in the field with your clients where you might not have as much control. You certainly don't have as much control over them as you would if you saw them, for example, sitting at their desk in the office working through a meal period, right? Now, if they're out at a client site working through a meal period, you might not necessarily know about that, right? But the law imposes on you a duty to make sure that's not happening. So that's really the challenge. And the question is, how do you go about doing that? And we'll jump into that today with some specific recommendations. But that's the challenge, and I think that the quicker the agency owner and management can come to that realization that it's actually our burden to make sure that we have the accurate working time as it's defined, like we just explained, of any time an individual is doing something that's benefiting me as an agency owner, benefiting my clients, helping our business, whether we've asked them to do it or not, we've got to track it and make sure we're paying for it. And I can tell you this, in doing this for many, many years now, this is something that your managers don't understand. They don't believe or understand that if work is being performed that they didn't ask for or require, i.e. voluntary work, that they must pay for it. And I think that's really the biggest disconnect that I see in the litigation that we handle. So just a quick recap, right? The burden is always on the employer to establish that there's an exemption to minimum wage and overtime. So the presumption is that all employees are non-exempt and they're entitled to minimum wage and overtime, and then you would have to show that somebody's exempt from that. And that may be because they are an exempt employee. It may be because they're a true independent contractor, which is a difficult burden to establish, right? And independent contractors aren't subject to the Fair Labor Standards Act. But the burden is on you as the employer to establish that they aren't entitled to minimum wage and overtime. Also understand that these exemptions that I'm talking about, the exemptions are not just about how we pay people. A lot of owners believe that as long as I'm paying somebody a salary and the salary is high enough to meet the salary level threshold, they're exempt. And that isn't true. There's also a duties element to the exemptions. You have to meet both the compensation element to be exempt from overtime and the duties element. So we had talked about the idea that there are state laws. There are also a lot of times local ordinances, city level ordinances, or county level ordinances. You've seen this with respect to, for example, sick pay, paid sick time, and minimum wages. In California, the minimum wage can vary by the county that you're working in. Are you in LA? Are you in San Francisco, San Jose? Those rates are changing all the time. So this map is just demonstrating, the various differences. And the green states have a higher minimum wage than what's required, the $7.25 under federal law. The blue states are the same level. The dark purple has no minimum wage at all, and then there's my state, Georgia, and one other that have one that is lower than federal. I think Georgia is something like $5 and something, but it's sort of irrelevant, right, unless somebody's bringing a state minimum wage lawsuit, which I've actually seen in home care as it pertained to travel time and some other working time that allegedly wasn't paid. But it's very rare that it becomes an issue because of the federal minimum wage. So let's jump into the exemptions quickly and just kind of talk about, again, this idea that there's a salary element and a duties element. So an LPN, for example, you could pay an LPN $100,000 a year of salary that isn't deducted and that you're paying in accordance with the salary requirements, and that LPN will still not be exempt under the professional exemption because the LPN doesn't meet the duties qualification. An RN can meet the duties qualification and be professionally exempt. A physical therapist, occupational therapist, medical social worker, those type of positions can be exempt under the duties test, but not LPNs, not CNAs, not home health aides, not PTAs, or any of the assistants. And then likewise, you could pay a RN, and I've had this case too, $100,000 salary, so they meet the salary test, but the RN isn't doing exempt type work. Let's say that we have the RN, we're at a low census, and the RN is spending a lot of time charting notes, right, or filing in an office. That RN will not meet the duties test for the exemption and will be treated as non-exempt. And what that means is that $100,000 salary gets converted into an hourly rate, and the minimum wage, or the overtime that is owed to that particular RN, is going to be very high. And the more hours they work, the more overtime is owed. So you can't use a salary or anything else like a bonus, right, or an agreement of any kind, commissions, to offset an overtime obligation if an overtime obligation is due. That's the issue, what we see often with independent contracting. Companies think that, well, I've got an independent contractor agreement, and both me and the consultant or the individual worker agree that they should be treated as an independent contractor. They've signed the agreement, so no harm, no foul. There's no problem. The worker has agreed to it too. That isn't how it works under this law. The worker cannot waive their right to overtime if they're entitled to overtime. So there will be an independent test that's applied to determine whether somebody's an independent contractor, whether you say they are or they say they are or not, doesn't matter. Do they meet the independent test? And like I said, there are several of those tests. The one that applies in this world is the economic realities test. And when I say this world, I mean the wage hour world, the Fair Labor Standards Act. And that one's very difficult to satisfy. So just remember, there's a compensation component and there's a duties component for the exemptions. I'll just kind of quickly go through these exemptions, and a good threshold, and it depends on the employer for sure and what exactly you're doing, but a lot of times you see an employer where maybe 20% of their workforce is exempt, 20% or less, and 80% or more is non-exempt. I talked to my neighbor the other day, and he told me that everybody at his company was exempt. And I told him, no, they weren't, and he needed to hire me, and we need to work through this because you don't have an entire company of exempt employees. You've got the managers who may be exempt, and then the doers who typically are not exempt. So the executive exemption is the one where you have somebody in a management role that's involved in the hiring and firing process, the disciplinary process. They're supervising 2 or more full-time equivalents. The administrative exemption is probably the one that's most overused, and that's an individual who makes significant decisions on behalf of the company and on behalf of the operations of the company rather than the production of the company. So that can be a challenging one for people to be administratively exempt, and that's a subjective test. So I prefer not to rely on the administrative exemption unless it's clear that that specific position has been vetted and determined typically to be exempt. The professional exemption is the one that's going to apply for the RNs and physical therapists that have an advanced degree in learning and that are performing those kind of clinical duties that you would typically see from a skilled clinician. The computer exemption really doesn't apply too much in this world, but that's one of the rare exemptions where you can pay somebody hourly, a certain hourly rate, and they can still be exempt. The outside sales exemption is often overused in home care, where we treat marketers as outside sales and treat them as exempt, but in reality, they're inside salespeople, and there's no exemption for inside salespeople. So to be an outside sales exempt employee, they've got to be outside and selling, right? If they're sitting at their desk or sitting at their home and doing marketing type services, and their compensation isn't tied to whether the quote unquote sale occurs or doesn't occur, right? In other words, a commission-based or a significant commission in the compensation element, they're probably not exempt. So just keep that in mind. And that's one that you ought to look at if you've got folks that are in positions that are sales positions and we're not paying them overtime. Okay, so let's transition now to some of the targeted pay practices that we see, and I'll kind of give you the inside baseball on some of the things that we've seen lately. Let me preface this way: we're not going to be able to review all of these because there's just not enough time. If there's something you see on here that you have a particular interest in, type a question to me, and I don't get to it in the body of the presentation. Type a question, say, hey, I'd like to hear more about live-in care or rounding or one of these ones that is not in red. And I'll cover a couple of extra ones here as a bonus, but you just let me know and I'll get to it. But what we've seen generally, let me start with sort of the big picture, is since the live-in and companion exemptions were eliminated at the end of 2015 for any third-party provider, right? Any third-party agency can no longer rely on those exemptions, and those were federal exemptions. Certain states already required that you pay these kind of workers overtime. There's been a massive uptick in litigation, pay practice litigation, as it applies to the home care world. Both private litigation, meaning, an independent lawyer that's not affiliated with the government is bringing lawsuits, and most often those lawsuits are class action lawsuits where they're attempting to represent an entire class of employees, like all of the caregivers or all the live-ins, or with respect to some claims, like a rounding claim, all non-exempt employees, right? And then also Department of Labor lawsuits. And the Department of Labor has been very active in bringing lawsuits against home care. And home care is now the #1 most targeted industry, and it has been since the end of 2015 for these kind of pay practice lawsuits. There have been a lot of exemption lawsuits in the skilled care world as they pertain to pay-per-visit practices. Looking at the attendees, it doesn't seem that many of you are doing skilled care. I know some of the franchise systems are now adding private pay skilled care visits. I'm not sure if any of you have that, so I'm not going to talk about pay-per-visit unless you tell me that you need to hear about pay-per-visit and exempt practices for these type of RNs. But we are seeing that enter into the franchise world a little bit more with certain of the franchise systems that are adding the skilled care nursing visits. That's been a significant area of litigation, and that concerns me, to be honest with you, a little bit. I've been working with some of my franchisor clients on educating the franchisees on those ins and outs because it's difficult. The pay practices are difficult with respect to pay-per-visit. But putting that aside, most of the litigation is over the non-exempt pay practices, sleep time, day rates, travel time. And initially those lawsuits at the end of 15 and 2016, and I'd say the first part of 2017, were basic lawsuits of, yeah, you're not paying overtime at all. You're not paying travel time at all. And now what we're seeing is more sophisticated lawsuits as the industry is becoming more and more compliant. So those type of lawsuits are now the manipulation of pay rate lawsuit, which is probably the most common suit that I've been seeing in the last 6 months. You're changing rates based on the number of hours you anticipate a caregiver to work, in an effort to keep your overtime obligations limited. That's effectively what the argument is. So you really need to be careful if you're changing rates. You can change the rate as a result of the type of work that's being performed. So, for example, you could pay orientation at minimum wage and then service hours at a different rate, or you can charge differently for couples care than you do for singular care, or charge, live-in rates differently than what is referred to often as hourly service rates. You could even pay for a short visit a higher rate for something that's 4 hours or less, not because you're trying to hold down the overtime obligation, but to incentivize somebody to take that shift, just like you might pay a higher rate for weekend care. So those things are okay, but when you have a high hours case and a low hours case, and you see somebody's rate shifting based on the number of hours they work each week, so I'm going to pay you $10 an hour this week when you're working 55 hours, and then you're doing the same work the following week, but you're only doing 40 hours, so I'll pay you $15 an hour or $12 an hour. That's going to get you into trouble, and a lot of companies have, and I've had this, and I see that there's several franchises on the phone. I've had that case at the franchisee level in Texas, several cases in Texas, also with the Department of Labor in Florida, in New Jersey, in Michigan. So that's a case that is being filed a lot, and I expect to see filed a lot more in 2019. Independent contracting claims, there's a ton of those, particularly as they pertain to the registry model. Florida has been hit very hard. I think that there's a softening by the Department of Labor anyway on targeting registries like they were last year, such that a registry being an independent contractor matchmaking type model, which really needs to be a very hands-off model to be effective, or think of, some of the disruptors that are the online models like a care.com. I don't think that we're going to see the same effort to litigate against those kind of models in this coming year unless there's a complaint. If it's complaint driven and somebody says, hey, I've got an issue and, I'm not getting paid overtime, or I'm not being paid, on time, or whatever the claim is, that's when you're going to see DOL investigations. You're still going to see lots of lawsuits, though, about misclassification of independent contractors. That's a given, and the law is constantly evolving on what it is to be an independent contractor. So when the law is unclear, that's where you see lots of lawsuits, because the lawyers take advantage of some of that lack of clarity and the inability for a company to be ironclad and certain that they've got their classifications correct, so they'll target sort of that gray area. The good news for any W-2 agency is the rules are not gray. They're very clear cut. You just need to understand them. And what I would tell you is it is remarkably important that you focus on compliance, and you're focused on making sure that you are doing things the right way, and that you understand what the obligations and the laws are in your jurisdiction, both at a state and federal level. You understand how to set up your live-in care where you're not using day rates, but you're using hourly pay, and you're actually tracking interruptions to sleep or meals if you're not, paying on a 16-hour day, right? There are ways to set this up, and typically, by the way, for live-in care, and people get really concerned about live-in, and some companies say, well, I don't even offer live-in care anymore because I worry so much about the lawsuits. Unless you're in New York or California, live-in, if you set it up the right way, is remarkably easy to do. It's not hard to do, and I think it's probably safer to do live-in than it is the multi-visit type stuff out in the field. So you just need to make sure that you're understanding how to do it, right? And what I was going to say is normally the rates that the caregiver are being paid are high enough where you can pay minimum wage plus overtime and track things the right way and set it up in a manner that your risk is extremely minimal without increasing your labor cost at all. So you can go through just some simple adjustments and having the right agreements in place and those sorts of things, from potentially 100% liability to close to zero potential exposure. And that's the type of pre-planning that I think is necessary, right, and proactive analysis that home care really needs to spend some time on. Don't wait for the lawsuit or the Department of Labor investigation to focus on these issues, because many of these issues are pretty easy to resolve, and it will avoid the litigation, and you won't have the audit, or if you have the audit, they'll go away. We had a client that went through our compliance. One of the things that we do at Littler is we'll do an analysis of all the onboarding materials that you're using and pay records and things like that. And yeah, we'll tell you where the warts are, where are policies too weak, where are you missing, say, a travel policy. Hey, you don't have the right agreement here. Your offer letter needs to be strengthened so that people understand that they have to record all their working time, timekeeping policies, those sorts of things. And we had one company, and it was a California company, which is the most difficult jurisdiction to be in compliance. And a DOL investigator, it's called the DLSE, but it's the equivalent of the State Department of Labor. And the investigator had been doing it for 25 years, came in as a result of a complaint, a competitor complaint, started to investigate the company, looked at the policies and practices and the payroll files, and the investigator said, this is the cleanest home care company I've ever seen. These are the best policies and practices I've ever seen, and I don't need to continue this investigation. She turned around and left, and that was because that owner was proactive about addressing these issues on the front end. And I really see in the industry now, more than ever, a real distinction between what I call the haves and the have-nots, the folks who have either been through a litigation and focused on this sort of thing, which is the most common way that you're forced to focus on it, is you have a lawsuit, you have an audit, they uncover a bunch of things, you have to pay a bunch of money, and you have to fix the problem. Or you have people that are proactive and say, I want to know if I have any problems now, to avoid all that, which is the much less expensive way to go. But those two groups probably constitute about half of home care now. And then the other half are those who either haven't gotten around to it yet, and they really are not sure how compliant they are. They haven't been too focused on it, or those who have just decided I'm not going to focus on it. And it's about 50-50, maybe a little more on the compliance side now. It used to be more like 20-80, I would say, towards non-compliance in the beginning. So we're getting better, but if you're in that other category, that other 50%, which I suspect you're not, or you wouldn't be on this call, that's who's being targeted quite a bit now with some of these sophisticated claims. So let's transition here and talk a little bit about orientation and training. This is often an area of confusion where I see home care struggle sometimes. And here's the issue. I'll just lay it out for you. You orient some potential caregivers that you like and you've interviewed, and then they go away, and 2-3 weeks later, you've got an opportunity for them. And when you go to call them and have them work for you, they're employed somewhere else, or they never call you back, and they ghost you, as the kids say these days. And so you don't want to pay them for the orientation time. You don't want to go through the exercise of doing all that. And so a lot of home care companies call those individuals pre-hire employees. Hey, we haven't hired them yet, so we don't have to pay them. But the reality is that if you're orienting somebody on your specific practices and policies, how you like to manage and handle your clients, what you expect them to wear, what you expect them to do, that's all compensable time. And you can't, because they're not on your payroll, you can't treat them as though they're not your employee. And if there is a suit or a challenge to that practice, you're going to lose that, and you're going to end up owing that money to the individual. Like I was saying before, you can pay them minimum wage. There's no obligation that you pay them at whatever their base rate's going to be when they're actually productive for you and you can bill them out. But you have to pay them for company-specific orientation. What you don't have to pay for typically, and this is somewhat state-specific, so just remember I'm giving you a broad overview, is pre-hire paperwork. If I'm filling out my tax forms, if I'm doing my benefit elections, the basics, filling out an application, even a simple competency test that doesn't take me very long, those sorts of things that are really primarily for my benefit, that typically is not compensable. So what the smart companies are doing is they're dividing up the non-compensable stuff and having them do that as part of the pre-screens, right, of, fill out all this stuff that I don't have to pay you for and get yourself prepared, right, and we're going to do the background check and all these things. And then when I'm ready for you to do some work, I'll call you in and we'll orient you right before you do the work. And, another benefit to that is, number one, the retention rate, right? You're going to hold people longer if you can orient them and get them to work as quickly after that process as possible, right? And then also the caregiver shortage issue, right? And the problem that we're having with hiring and recruiting caregivers that everybody's faced with, and it's only going to get worse as the demand for services increases, right? We have just a lack of workers, and you have all these disruptors coming in that literally the caregiver can go online and have a job in the matter of an hour or a couple of hours, pending, the background check clearance, but it doesn't take long. It's a very easy process. You're competing with that, and you're competing with Amazon. So the quicker and easier and closer to the actual work you can make your vetting process, your hiring process, the better you're going to be for that purpose as well. Now, let's compare that now to training. And this one, I want my franchisees to pay special attention to this. Most franchisors offer voluntary training modules, right, to help caregivers do their job better, and train them on various things, a Hoyer list or whatever the training may be. And that's one of the perks of being a part of the system, is you get access to these trainings. Now, if one of your, I've had this very situation come up, if one of your employees is a franchisee, and this is the information I'm providing applies to everyone, okay, about training, whether you're a franchisee or not, but I just want to highlight this issue because I know you probably have it. If a franchisee uses those training modules, franchisee's employees, even if you as the owner didn't tell them to do it, they're entitled to compensation for that. And a lot of people don't know that. So the situation I had is, as one of the caregivers came into the franchisee owner and said, hey, I was tooling around on the intranet and I did 10 hours of training this weekend, and I want you to pay me for that training. And by the way, that's overtime because I did 40 hours of work for you during the week. So you owe me at overtime at my base rate, my regular rate. And the franchisee went through the roof and said, well, I'm not paying you for that. I didn't tell you to do that. And, no, I won't do it. And, the franchisee had to swallow a bitter pill of that's actually compensable time. So, again, back to what we were talking about at the beginning, you've got to control that. You've got to make sure that you have policies and procedures in place. Our toolkit subscribers have some access to things like that, like an acknowledgement. So, for example, one of the tools that we use is an acknowledgement that, and you can customize it how you want, but what we say is no training is done without prior authorization. You can't use these modules without our authorization, and you've got to get supervisor approval, and we'll let you know when to do it. Some clients say you need to be in the office when we tell you to do it, when you can do it, and they do it in low census times, right? And by the way, the rate for that is going to be minimum wage for the training, right? And now if somebody goes and does the training, you still would have to pay them for it, but now you can discipline them for not following your protocols, and that typically is not going to come up, right? Same thing with sometimes modules say this should take 2 hours to complete this training. That doesn't mean that you can just pay them 2 hours. You still have to pay them for the actual amount of time it took to do the training. Now, the question always comes up, well, what about if the training they are doing is required for them to hold a license, like a CNA? If it's voluntary, and this is a very state-specific issue, you got to look at your state law, but oftentimes, if you're not mandating or requiring the training and they need it for their license and all you're doing is making it available, it's not compensable. That's different, by the way, than CPR training. CPR training for existing employees is typically compensable time. We've analyzed that and looked at that, and why? Because it's job-related training, right? So here are the factors that apply for a training not to be compensable. It has to be outside regular working hours. It has to be truly voluntary. And it has to be not job-related. That's the one that's a real problem. Why would you train anybody on something that doesn't have anything to do with their job? Typically, that's not what you're going to do, right? And then there's no other productive work being done, right? So like shadowing type training where I'm gonna do hands-on training, I'm actually doing something productive, is always going to be compensable. So just keep those rules in mind, and if you're going to treat training as non-compensable for any reason, then make sure you have an opinion on that from a lawyer saying, yeah, we think that this category of time can be treated as non-compensable. And I also like having an acknowledgement in that situation where employee acknowledges their understanding that the training is voluntary, it's primarily for their benefit, and it's not compensable. This slide is just covering that sometimes these state-required trainings, particularly if the training is not, it's generic, it's not company-specific, and it's transferable from company to company, in some situations can be treated as non-compensable. But again, don't make that decision on your own. Get guidance on that. Make sure you know what the law is in your state. Okay, so we talked about the pre-hire paperwork. So just to recap that, right? It's typically not compensable if it's a condition of employment. It's routine paperwork like the direct deposit forms or tax forms, right? And you don't have any control over when it's done. In contrast to compensable type things like a review of the handbook would be compensable time, right? Instructions on how to handle a client, right? Or company-specific instruction is compensable time. The longer the orientation is, the more likely it is to be compensable. So just keep that in mind. All right, let's move on to the next one. Remember, if you have questions on any of this, or something I didn't cover, put it in the box. I haven't seen anything yet, so I'm going to move on now to on-call. Another area where companies in the home care world, and really all industries, often get this wrong. Okay, they often have issues with their on-call pay practices. So let's start with the basics. For an exempt employee, one who is not entitled to overtime, a truly exempt employee, meaning that they meet the duties test and they are paid the right salary. And by the way, we are litigating against the Department of Labor. You might have remembered that the Department of Labor, under the Obama administration, attempted to increase the minimum salary threshold from what I think is $23,660 to $47,947, I think it was. So more than double that minimum salary. We brought a litigation on behalf of a coalition of many associations and providers across all industries, because this is one that applied to every industry, this salary increase, and challenged the Department of Labor and won that case, which is currently up on appeal. The Department of Labor has appealed the decision not to allow the Department of Labor to increase salaries to $47,000. In the meantime, Trump won the presidency and brought in different political appointments at the Department of Labor who are not interested in going all the way up to $47,000. Their interest is probably going to be more like $35,000 salary threshold. So you can expect to see that. They're formulating what that threshold is going to be right now, and they've been out talking to the public at large about what you would like to see, which is probably nothing, but I should rephrase, what would be tolerable to various industry groups. And I think that announcement will come first quarter 2019. That salary increase probably doesn't go into effect until towards the end of 2019, but you can expect that to be coming. And then also just remember that there are state level exemptions in many states as well that may have higher salary thresholds than that $23,000 that it currently is, which is $455 a week. As long as the salary under federal law is more than $455, that's enough to meet the exempt threshold. And then the question becomes, are they performing exempt duties? So if you have an exempt employee and that exempt employee is put on call, there's nothing additional that you have to do for that employee. Most employers will pay that employee a premium for being on call, which is, as an incentive to cause them to be on call, but you actually don't have to do that. That's not necessary. That's something that's more of a incentive than a legal requirement. So the best thing you can do with your on-call is give it to somebody who's exempt, and then you don't have any additional obligations. You can pay them a premium if you like, probably will, but give it to exempt employees if you can. If you can't do that, that's where we have some issues, and let's start talking about on-call practices for non-exempt employees. So first of all, the general rule is as long as the worker, the employee, is not actively, it's the difference between waiting to be engaged, which is non-compensable, versus engaged to be waiting, which is compensable. That sounds strange. What I mean by that is if, for example, you call somebody into your office and say, I need you here at 9 o'clock, but you don't actually have any work for them to do until 11 o'clock, but you require them to be there at 9 because you thought you would have work to do. You have to pay them starting at 9 o'clock, even though they're not doing anything. That's engaged. You've engaged them to wait for the work, right? They are restricted. They're not free to move about the cabin, right? So you've got to pay them because you've limited their ability to move. So anytime you have somebody who's on call in your agency, like they're located physically at your location, you have to pay them for all that time that they're on call, whether they're actually actively taking cases or answering the phone or not. However, if you allow them to be at their home and you just require them to be within a certain radius and to respond within a reasonable amount of time to a call, that's waiting to be engaged. They're not actively doing anything yet, and they are not restricted, overly restricted, so you don't have to pay them for the time that they're waiting. But anytime the phone rings and they're actually working, you do have to pay them for that time, and that time has to be tracked and paid. So here's where you guys fall down sometimes, is we pay a premium for people to be on call, non-exempt employees. We pay them, let's say, $100 for the weekend to be on call. And we try to substitute the actual work hours for the premium and say, look, we've paid you $100, so we're not going to track and pay you overtime or hourly wages on top of that because you're already getting $100, and that should be enough to cover it. That's not how it works. Remember, we said before that an employee can't waive their right to overtime, and the on-call premium is not considered overtime or for working hours. It's considered a pay for just them being on call. You're going to pay that to them whether they're work or not work, so that's something different than pay for working time. In fact, and this is where it gets really crazy, not only do you have to pay them for their working time, in addition to that on-call premium, you have to factor the on-call premium into what you pay them. So if they're in an overtime situation, that on-call premium goes into their regular rate for overtime purposes, and you've actually increased the overtime rate. So let's say they're $10 an hour employees, right? And you pay them the $100, and that $100 averages them out to $12 an hour instead of $10. So your overtime rate on that is $18 and not $15 because you have to factor in that on-call premium. So what do you do there? How can you address that? Couple of ways. The easiest, like I said, is give it to exempt employees, the on-call responsibilities. Next, instead of paying them a premium, just pay them hourly. Don't pay them an on-call premium, pay them hourly. And if they're in overtime, the overtime is the incentive. If you don't think that's going to fly, give the on-call responsibilities to somebody who's not in an overtime situation. So what a lot of clients do is they will say, you work 32 hours this week and take Friday off. I'm going to give you the on-call responsibilities this week, and then we'll shift it to somebody else who will work 32 hours that week. And you're paying them the premium. Let's say you change the premium from 100 to 50, and you're paying them for their hours, but you still have to track their hours and pay their hours. You're not going to have that squirrely situation with the overtime and increasing the regular rate unless they work more than 8 hours of on-call time because they wouldn't be in an overtime situation. So there are ways to do it. You also can, and I have done this, and this is something that would require consultation and paperwork and doesn't work everywhere, but you can kind of offset the premium, the way you treat the premium, and it has to be in writing and acknowledged, is, hey, I'm going to pay you up to $100 or $100 minimum, but that $100 is for 10 hours of working time at $10 an hour. And if you work anything less than 10 hours, I'm still going to pay you the full 100. If you do anything more than 10 hours, you have to report it, and I will pay you your hourly rate. And companies love that. They love that program, but it's very, very important that you document it and run that correctly, or it will not work. And like I said, it's not going to work everywhere. So if you have an interest in that, call me. We can talk it through and find out where you are and get you the materials where you are, meaning state, the materials you would need to do that. Or if you're a toolkit subscriber, there's some information on the toolkit on that. Okay, so let's move on now to travel. Travel is one that creates a lot of headaches and still one of the most common issues that we see. So basic rules on compensable travel versus non-compensable, and then we'll get into some of the minutiae here, okay? Typically, very important word, typically, travel from my home, let's say I'm your non-exempt caregiver, my travel from my home to either your office or my first client is not compensable. Also, typically, my last travel from my last client or from your office to my home is not compensable. Now, there have been some contrary rulings to that we'll get to in a minute, but that's typically the case. Any other travel that is occurring from work site to work site, so from your office to my first client, from my first client to my second client, all of that travel time is compensable. It does not matter, by the way, how much time there is in between the visits for that time not to be compensable. If it's happening within a day, within my shift, and that's called the split shift scenario, then I'm going to have to pay some travel time as the agency owner, even if the visits are 3 hours apart, 4 hours apart. And I'm going to show you an example of what the Department of Labor said about this in just a second to prove to you that's the Department of Labor's position. If there's enough time in between the visits where I can engage in personal pursuits, and how companies define what is enough time of downtime, it's a minimum of 30 minutes. My rule of thumb is If the visits are an hour or less in between each other, then just pay the entire hour or the entire amount of time in between the visits, even if there's some downtime in there, because there's an argument that because I'm away from my home and I only have an hour, even if I can sit down for a half an hour or 20 minutes, that's not really free time because I'm out here in the middle of nowhere. I'm out here in my territory. I can't really go back and do what I want to do. Some folks are a little more aggressive and they'll say, look, if you get 30 minutes of downtime and the visit's an hour apart or 45 minutes apart and 15 minutes of it's travel and 30 is downtime, I'm not paying you for the downtime. I like the hour rule. What that does not mean, though, that if it's over an hour, you don't have to pay any travel time. So let's address that issue now. Okay? So that issue is this. 3 hours in between visits, and 2.5 of those hours, let's say 2 hours and 45 minutes, are downtime. I go to Target, I go to Walmart, comparing prices, having a good old time, getting the Target popcorn, loving life, and then I just have, 10 minutes, let's say I spend 20 minutes getting to Target and then 20 minutes back to my next client. But had I gone directly from client A to B, it would have only taken me 15 minutes. What do I have to pay as the agency in that situation? What you have to pay there is 15 minutes. You have to pay the estimated travel directly from client A to B. You don't have to pay for all that downtime as long as I wasn't doing any work, but you do have to pay for that estimated time. And I'm going to show you an example of that here in a second. So very, very important to understand that is the rule, and there's no amount of time, 4 hours, 5 hours, that make the estimated travel between visits in the same day non-compensable. So you have to have a way of accurately tracking the actual travel time, right? That's the best scenario, is have the caregiver report the travel time, and if the caregiver isn't doing that, using accurate estimators to figure out what is as close proximity as we can get to the real travel time. In the situation I gave, where I'm going to Target and Walmart and doing all that stuff, the only thing you can use is an estimator because that travel didn't actually occur, right? So using MapQuest or some type of algorithm to determine what would be the travel. And if you are using that type of system where it's an estimate, the best thing you can do is have the employee confirm that the estimate that you're using is accurate, right? So let's say the employee doesn't report their actual travel time. We know they did travel. So now we're using an estimate, and MapQuest says it would have taken 10 minutes. Before we just pay them 10 minutes, we should get the employee at the end of the week to confirm, yeah, that looks accurate, that's about what I spent, or no, I think it was more like 15 minutes because there was heavy traffic that day, or whatever. But now we're taking our assumption, and this is key with all a wage hour. When you're using an assumption in the place of an actual time record, you are at extreme risk that you may be held liable. So what you're doing now is taking your assumption and making it the employee's time record by having the employee confirm that it's accurate. You're going to hear that again from me when we talk about time certification. But that's a very important thing to do. The next thing I want to talk about for a minute is mileage, and when do you have to pay mileage? Mileage only has to be paid under federal law if it's a minimum wage problem. So if you're paying people only minimum wage, then you have to pay them mileage anytime the travel would also be compensable. So in other words, you wouldn't have to pay them mileage for the first travel of the day or the last travel of the day, since that's not compensable time. But any compensable travel time, you'd pay mileage as well, because they would otherwise fall below minimum wage. You're only paying them $7.25 or minimum, whatever the minimum wage is. So if I'm paying no mileage, they have an expense that drops them below minimum wage. But as long as they're higher than minimum wage, and the failure to reimburse for mileage does not drop them below the minimum wage, there's not an obligation to pay mileage under federal law. Most states are the same way too. I know that California does require you to pay mileage. So there in California, you should be paying mileage at the IRS rate. Same thing with Massachusetts. But most states do not require the payment of mileage. So sometimes we see companies make the mistake of paying mileage and not paying the travel time. You never want to do that. Between mileage and the actual travel time, you always want to pay the travel time. That's the priority. We know that we always have to pay that time. We don't always have to pay mileage, okay? Just so you know that this is a real issue, here's an example of a case that's settled for $2.2 million. There's a more recent case in New York where the number was, I think, $4 million on travel for several home care workers where there was an assumption being used instead of real time. So let me address this continuous workday issue as well so you kind of understand the theory and why it's so critically important to have a good, strong travel time policy. That's one of your, and as a home care provider, that is one of your critical policies to have. There are several critical policies. That's one of the biggest, most important ones to have, is a really good travel policy. And here's why. There's a new theory, and we've been litigating this all over the place, a lot in California. But the argument is this, that look, as a caregiver, as your caregiver, I really, don't have an office. My home is my office. I work from home. And I actually start my working day at my house before I leave. So I will call clients and make sure that they're going to be there. I'll talk to my supervisor, and then I start driving. Or I start making those calls while I'm driving, which makes that drive time compensable, because I'm even though it wouldn't be compensable on its own, I'm doing other work that makes it compensable, right, for the benefit of my employer. So all that time's compensable. That can really add up. If you think about what they travel that we're not paying for at the beginning and the end of the day theory is I come home and then I release notes, or I talk to my supervisor, confirm work for the next day, or finish up some paperwork, whatever it is. I finish up my day from home. So under the continuous workday theory, you have to pay me for that time because my work never really stopped until well after I got home. So what that theory is, just so everybody understands, is once you start working for the day, any additional work that you're doing is compensable. And even things that would not be treated as work become compensable unless there's enough of a break, which under federal law has to be at least 20 minutes of non-activity, non-work activity to treat that break as non-compensable. So the example this comes up a lot that really frustrates people is smoke breaks, right? If I go and I clock out for a smoke break, let's say your receptionist clocks out for a smoke break, spends 15 minutes smoking and clocks back in, you have to pay her for that 15 minutes because she had already started working, and the 15 minutes isn't enough of a break in the day to treat it as non-compensable time under the continuous workday theory. If she was out there for 20 minutes, you could treat that as non-compensable time, but 15 is not enough, right? So same thing, if I come into your work, I start working as a non-exempt employee, I start sending emails for 10 minutes, and then I go to the coffee machine, hang up my jacket, do all this other stuff for 15 minutes. All that time is compensable. But if I did that first before I did any work, it wouldn't be compensable. If I went and got coffee, went to the bathroom, talked to people at the water cooler, and then started working, none of that time is compensable. So the order really matters. And what the policy that you want, what it needs to say is, you're not expected to work from home. It first lays out these rules that we just talked about on travel. Nobody's expecting or asking you to work from home. And certainly if you do work from home, nobody is asking you to do that immediately before or after your commute to work. Now, as long as you're following that policy, that breaks up that continuous workday theory. And so let's just assume that somebody's doing 30 minutes of travel pre and post shift a day, 5 days a week. That's 2.5 hours of overtime you just saved per employee. So class action, if you got 50, 100 caregivers, that's hundreds of thousands of dollars that you just saved, right, where there's no liability where there may be before by having a policy that's, 4 or 5 sentences long. And that's what I'm talking about. That's where the juice is at, my friends. That's what you want to be focused on, is what can I do to minimize my litigation risk, my profile, where am I weak, where am I soft, where do I not have the right policies and procedures in place that aren't very difficult to put in place that are going to save me a ton of money in the long run, right? That case that I just talked about is a $400,000 or $500,000 case if you don't have the right policy in place, right? And that's what the workers are alleging that they're doing. It doesn't even mean that they're actually doing it. It means that they talked to a lawyer that said, hey, if you say you're doing this stuff, they're not going to be able to prove you didn't, and now you got a good claim. So this, what you see here on the screen about the split shift, is just showing you what I just told you about the idea that there's not enough time that would allow you not to pay any travel time between visits, right? So handy home agency, the caregiver has 2 agency clients. Sees one from 9 to 11:30, and then the next one from 2 to 6. So you got a 2.5-hour window, right, in between. A lot of companies aren't paying anything for that because they're saying, hey, there's no work being done. They're far enough apart. You have downtime, right? What the DOL says is that the 2 clients are 30 minutes apart. Miss Jackson goes home or goes to a restaurant, right, shops, does stuff all for herself, and then goes back to the client 2 at 2 o'clock, right? And what this is basically saying is you don't have to pay for all that downtime, but the 30 minutes required to travel between the 2 homes is hours worked, and as of January 2015 must be paid, right? That's 30 minutes. So that's what I was telling you. See, I don't lie to you. I tell you the truth. All right. So I think we've covered all this. This is just kind of a summary slide. One other thing I wanted to reference, in the event you have non-exempt pay-per-visit employees, these are employees that you're paying by a visit rate, and they don't qualify for an exemption. Remember, we said the ones that can be exempt are RNs, physical therapists, occupational therapists, social workers, right? You can pay them by the visit, and as long as you're paying flat rates and you meet these other requirements, which I was mentioning earlier, are difficult, very difficult to do, but you can do it. You just need to make sure that you've got the right policies and procedures in place and a visit policy and all that. But it can be done, and you're not altering those rates. They would be exempt. But for non-exempt, let's say we have a home health aide and we just say, look, a bath visit, we're going to pay you at $30. That's what you get, regardless of how much time you spend on that visit. Because they're non-exempt, they're still entitled to overtime. So even if you have a policy to pay by the visit, you still are going to have to track all their time work, and to the extent they're over 40 hours in a work week, you've got to pay them at time and a half. In addition, you've got to track their travel, and it's very important that you have a policy that explains that the visit rate you're paying encompasses everything related to the visit, including travel time and any charting that you're doing or phone calls to that client, right? That's all included in the visit rate, but you're still tracking all that time so that if the person is over 40 hours in a work week, we're paying them overtime. All right. No questions yet, so I'll move on to the next one. If anybody has a question, don't forget to add it. Let's talk meal and rest breaks, okay? First rule on meal and rest. We talked about the distinction between a break that's a non-meal break under federal law has to be at least 20 minutes for you to treat it as non-compensable. Anything less than 20, you're going to have to pay for it under that continuous workday theory. For a meal, it has to be 30 minutes for you to treat it as unpaid. If it's anything less than 30 minutes, although there's an argument, I don't even want to mention it to you because it's a difficult one. If it's less than 30 minutes or there's an interruption in that meal, you actually have to pay the entire meal break, not just for the interruption. The idea is that the meal break was not bona fide. It's like it never happened in the first place because there was a significant interruption, a 5-minute interruption, a 3-minute interruption, or it was shorter than 30 minutes. I only took a 26-minute meal break. That's not a bona fide meal break, so you can't deduct any of that time. So the argument goes. So what a lot of companies don't realize is that under federal law, there is no obligation to provide a meal break. You don't have to do it, right? That's not true under many state laws. I think there's less than 20 states that require you to provide meal breaks. And then even in those states, in this industry, there's many exemptions to that where you can go through a waiver program where the employee can waive their meal break because they're working with, clients one-on-one care. Or if it's hourly type work, they can, they should schedule their visits with enough time in between that they can go and get their meal break, right? Or you schedule it for them, which oftentimes is the better way to go. But if you're in a state like Florida, Georgia, Texas, where there is, it's only the federal law, there is no requirement to provide a meal break, my view is you just have them record all their time and you don't mandate the meal break, because if you do and you try to get them to stop and you try to deduct time for meals, and I'm not talking about live-in care, I'll talk about that, I guess, briefly for a second in a minute. You're just asking for a compliance nightmare. I have a client that wants to have a national break policy, and I've been trying to tell this client for years, don't do it, because you're going to have a bunch of people, you're deducting 30 minutes for meals and you're relying on them to stop and take meals. These are drivers. They don't want to stop for 30 minutes and eat and do nothing. They want to kind of get their routes done and get home. So they're going to spend 15 minutes running through a drive-through or something like that, and you're going to end up, having to pay them. And that client has had 6 or 7 meal cases, lawsuits where people are saying they're not getting their meals. And I think they're finally coming around to the idea of we're only going to require meals in the states where we're obligated, like California, where we have to provide a meal break, right? And even California, there's a personal attendant exemption, if you can qualify for that, where you don't have to provide meals. Now, I said I would talk about live-in for a second. I'm not going to spend a ton of time on live-in, because in the interest of time, like I said, there are ways to do live-in right. The question about live-in is, do you deduct for meals or not? You're going to deduct 8 hours for any 24-hour shift or greater. You can deduct 8 hours of sleep time under federal law and in most states. And you track that, and there's rules about when you have to pay for sleep time. If somebody's interrupted, and if the interruptions are significant, you have to pay for the entire 8-hour period. And some companies will also try to deduct for meals, an hour a meal for meals. So breakfast, lunch, and dinner, you're talking about a 13-hour day. Federal law does not require the caregiver to be able to leave. As long as they can have an uninterrupted meal, they can be required to stay at the client's site. Uninterrupted means they're not eating with the client, right? They're not doing other work during that hour period. And, most of the DOL investigators I've worked with have accepted and agreed to the meal breaks, as long as we can show that they're getting their meal breaks through proper timekeeping and documentation, and said that that's fine. Some states, though, say that you have to leave the premises. Some of those states that have independent meal obligations, in those states, you definitely should be using a 16-hour day, not a 13-hour day, because they're not typically leaving, right? They're not typically able to leave because it is one-on-one care. In addition to that, the 16-hour day, even in the states where you can deduct the meals, I think is a safer way to go, because now you eliminate the argument that, I was interrupted for my meal, or I was eating my meal with the client, right? And like I said, you are going to have documentation, hopefully, if you're listening to me, where they're recording that they're taking their meals. But I think it eliminates the argument, and it makes things administratively easier, too, to the extent you have, for example, like a 5-day shift, that's 40 hours of straight wages and 40 hours of overtime, right? That's an 80-hour week on a 16-hour day. 8 hours of straight each day, 8 hours of overtime each day. It's a little easier to administer and to swap caregivers in and out when you've got something like that. So let's shift gears to time certification for a second. And this is another area that I think is indispensable. I think you just have to have time certification. That language varies based on the state that you're in, what you want to say, and also what your timekeeping system is. Toolkit subscribers, there's a good memo on this of where you can put some certification language into your telephony system, if that allows you to do that, right, into your software, if you have the functionality to do that, or if you're using paper timekeeping, right, the language that you want to have there. But what you're effectively doing is you are taking, and there's all sorts of different ways that you can incorporate time certification. So before you say, oh, we can't do it, they're remote, we don't have the ability, I would love to talk to you about how to do it, because we have come up with lots of different strategies. The ideal is a daily certification that any meals that they've taken that you're deducting for, that any work that they've performed or they've reported is accurate. We talked about travel, how this would work with travel. If you're using a travel estimate, you give them a report. Say, hey, this is the travel we have for you. Please confirm that it's accurate. And they say, yeah, it's accurate, more or less. And now you've got a certified time record. And it's so much easier to defend. Trust me on this. This is what I litigate. I can defend that. It's very hard for me to defend an assumption when the caregiver says, well, your assumption was not accurate. You said that I worked 40 hours. I really worked 50. Now what the caregiver has done is invalidated your time record, and that caregiver is going to get the benefit of the doubt, right? The caregiver and the caregiver's word is going to be given precedence over what you claim because your time record is not accurate, okay? So just keep that in mind. It can be daily. Some people do it weekly. Some people create a report that they send at the end of the week. There should be an ability to say yes or no rather than just simple language. Yeah, the time's accurate. No, the time's not accurate. Or the ability to report inaccuracies to somebody within your organization. So a phone number, something like that. Your time records, though, are absolutely critical. If you do not have visibility into what your employees are doing. So, for example, some clients say, just report the total number of hours you worked, add it all together, travel, time with the client, all that, and say 8 hours or 7 hours. That's not a very good time record. That time record is susceptible to challenge. You want to know, when did you start? When did you stop? When did you take your break? The more detail and information that you have, and EVV I think is great for this, right? And the GPS tracking, all that stuff is very helpful. It's good. You have remote workers, so you want to make sure you know where they are and what they're doing, right? And then if there's going to be adjustments to time, employees should be signing off on those adjustments. Otherwise, they can argue that whatever adjustment a supervisor made was not accurate, and again, you have a he said, she said scenario where the employee is going to get the benefit of the doubt. Employee can't argue that it's not accurate if they're the ones that told you to do it, right? Or they're the ones that have confirmed, yeah, I forgot to punch in. I actually stopped working at 5 o'clock. Here's what we use. One of the items on the toolkit is a payroll adjustment form that the employee signs, the supervisor signs, and now you have a good record. Make sure that we talked about how the on-call premium has to be included in the regular rate. So do most bonuses and commissions, right? For non-exempt employees, we talked about that visit pay, flat visit pay for non-exempt employees does not stop you from having to record their, get their actual reported working time and to pay overtime to the extent that they're working over 40 hours. So you need to make sure that your payroll system is working correctly, is calculating overtime correctly, using a weighted average, right? This is something that's an easy audit, by the way. You can look at your pay codes and make sure that all pay codes that look like they should be included are in fact being included in the overtime calculation. That should be done automated. Most systems can do that in an automated fashion. So please make sure you have got that covered. Really
Angelo?
easy to do. Yes.
So a couple things. One is that I know I wanted to let our listeners know that you had done a little bit of viewing what Rosemark can do for them. So a lot of these things are covered. And we found some things where we maybe could improve. So that was really great. So I just wanted to ensure that. But I also noticed that we have a question before you move on.
Oh, sure.
It says,
okay, so I see one here. We introduce our caregivers to clients in advance. Is this compensable time or part of the interviewing process since the client makes the final decision on who they want to invite to their homes? So yeah, that does have to be paid, right? Because that is working time, and that gets back to that sort of pre-hire thing, particularly if it's an existing caregiver, right? It's somebody that you've already been working with, right? You've got to compensate them for time, even if they do a terrible job, right? And the client says, no way am I working with them. They were, they came, dressed inappropriately and they were late, right? So you have to pay people regardless of the quality of their work, right? So it's presumably a benefit to you that they're coming in and hopefully helping you to secure a client. And where we see, particularly on the non-medical side, real issues with home care is that very situation, right? Is that we don't want to pay for anything that we can't bill a client for, right? In the private pay setting, or that's not reimbursable under Medicaid and Medicare, if it's outside of the service hours, we don't want to have to pay for it because that's just a sunk cost for us, right? And when I do a lot of due diligence work for private equity companies and for companies that are looking to acquire smaller home care companies, and the reason, or representing the smaller company, depending on what side of the deal I'm on, right? But what they understand is that these pay violations are assumed as soon as I buy your company, they become my problems even before I bought your company, right? That's called successor liability. It stays with me, so they want to do due diligence and make sure you're doing things the right way. That's an independent reason if you ever want to sell your company, independent reason to make sure that you're focused on these issues, right? It's not just the liability, but hey, am I an unattractive target because I'm not doing these things the right way? But yeah, you do have to pay for that time. And the other part of that question is, what about the travel time from the caregiver's home to and from the prospective client? I think there's a better argument that time is not compensable, right? Because that's sort of the to and fro that we were talking about. One other question that came in is can travel time be at a lower rate? Yes, it can. What you want to do if you're going to pay different rates for different types of work, you can do that, but you want to document that in a comp agreement or in the offer letter. So one of the things that we do, I'm going to talk about this toolkit here in a second, is that we have like an agreement that has, hey, here's your rate for non-service time, and that would include orientation and travel and any of these other things, and we're going to pay that at the minimum wage, the applicable minimum wage, and then your base rate for your service time is X, and that may vary based on these factors, right? And the factors are things like, what the client's willing to pay, or, who the reimburser is, or, whatever, the type of work you're doing, but not based on the number of hours that you're working, right? And sort of take that pay rate manipulation question and issue off the table. I think that is it, Linda. Do you see any other questions there I'm missing?
No, that's good.
Okay. All right. If you have any more, put them in, and we'll answer them real quick. Just quickly, a resource that's available to you is a subscription resource that we have. It's got a lot of the compliance materials that we're talking about, state-specific, is on our home care toolkit. If you have any interest in learning more about this, you can see what the types of materials are. There's a lot of the policies and agreements and guidance that we were talking about, you are welcome to either go to this site or just text to the number 55000, the word Littler, and that will ping us to follow up with you on what the pricing is in your state and provide you a demo, anything you'd like to know about the toolkit. On that website, there's also a video of what the toolkit is and what the resources are and how you use them in your state as well. So I appreciate all of your time. Thank you so much for tuning in today. If there are no other questions, I think that concludes what we're doing today. And as always, if you have any issues or just things that were not clear to you today, feel free to reach out to me. I'd be happy to address those. Thank you very much.
Thank you so much, Angelo. This has been great. I hope you will all take advantage of his offer. I think it's tremendous. All of this information is going to be on our website, so if you want to listen to it again or get more information through that, you'll also see that in the customer center. So I hope you all have a great day, and if we don't talk to any of you, have happy holidays and Happy New Year.
Thank you.
Thank you. Yeah.